Hello, everyone, and welcome back. Let's talk about Sundial Growers Incorporated. SNDL is the ticker symbol. They came out with this new slide presentation after they did their earnings this last quarter, and this has just been an absolutely huge business that has really done a massive pivot from its origins just a few years ago. And a lot of us seen this coming. This profitable portion of the business, the liquor retail stores, so liquor and cannabis, but the liquor Alcana brand was brought into the business, 350 plus retail stores, and that's a combination of liquor and cannabis, 820,000 square feet of indoor cultivation. We're going to go through the price action. I'm going to give you my thoughts of the last earnings statement. What's happening with this price? When can we expect some growth in the share price? What's holding it back? Hopefully we can cover all of that. Now, a football field is about 56 or 57,000 square feet, so you could tell how many football fields of indoor cultivation. The thing is there's a massive oversupply of cannabis, and they just can't seem to sell enough of it. So scaling is going to be massively important for this business to really generate some profitability in the cannabis section. And we're going to take a look at the financials to show you that the liquor portion of the business is profitable, but not the cannabis portion of the business. And if they continue to lose money, they will have to raise additional capital unless they have a plan to get to profitability and control their costs. Now, a large portion of the costs can come from losing money, having to spend cash at the end of the day because you're not profitable. And a large portion of cost control can come from employees. And you can see here as they do these acquisitions, especially with Zenabis, which is another portion of the business that was just recently acquired, possibly for pennies on the dollar. Hexo probably spent a lot more money on that business when they acquired it. But another portion of the business that wasn't performing well that they acquired, and cost control is going to be important. Is 2,500 plus employees ideal for the business, or could they operate with under 2,000 employees? That's something to take into consideration when they're thinking about cost control measures, and I'm not sure that Sundial Growers has placed enough emphasis there. They also have strategic investments where they spent a large portion of their cash basically making sure that they could strategically provide financing for cannabis businesses with the anticipation that possibly they could take those businesses over if they default on their loans or something to that effect. That is what Zach George, the CEO of the company, has alluded to, with more information promised to come in a few weeks, maybe a few days, as of we heard this last conference or this last earnings call. 922 million. These are all Canadian dollars. Latest quarter annualized net revenue. So that's what they've been able to acquire with only a quarter left. So a pretty massive amount of revenue generated by the business since they've acquired Alcana. Now you could say that's a massive amount of revenue, but if they are not operating profitable and they're still losing cash at the end of the day, it doesn't matter how large a revenue number is, in my opinion. So no debt, but when will they have to start taking on debt, or will they further dilute shareholders by raising capital? They only have 236 million. So how much are they spending, in operational costs at the end of the day? It's about 98 million as of this last quarter on a quarterly basis, 98 million a quarter. It's just been increasing. We're going to take a look at that number. So they've really got to get cost controls under control, but operating segments, they've just been growing this massive beast. They've been doubling down in the Canadian market. Canada's largest private sector retail, Canada's largest cannabis retail footprint, Canada's largest indoor purpose-built cannabis cultivation and processing facility. So largest, and then an emphasis on cannabis credit and selecting mergers and acquisition focus equity investments. So they're just looking for opportunistic plays, U.S.-based MSOs and other operators. They're looking to make investments that could be strategic, that could allow them to take advantage of federal legalization once that happens in the U.S. and they're also making investments like Zenabis, this medical retail, or that will help them expand internationally. I think they are looking at international plays, but they really are starting to build this massive beast that's still losing cash. So they really need to stay focused on profitability, and they have a strong balance sheet, vertical integrated cannabis, retail scale and experience, strategic cannabis investment. They've got a balance sheet on here, and if we take a look at cash versus debt, you can see that the cash on most of these covers a large portion of the debt in most cases. I would say, and SNDL is really highlighting the fact that they're starting to run out of cash, and it's been much higher in the past, but they don't have any debt, and they're not the only ones that don't have any debt. It looks like Kronos Group Incorporated also has nil on the debt, and there's another one here, very little here. But what they're trying to highlight is that they have a relatively strong balance sheet, and their income statement is projected to be higher than some competitors. If we look at Tilray Brands, but I believe that Tilray Brands is better positioned for international and U.S. growth and expansion, where SNDL is making those acquisitions, but they're acquiring a lot of businesses that haven't performed well in the past, and it's going to take a lot of cost synergies and vertical integration to turn that around. So how long will they have to burn money before they're actually generating a profit in all business segments? So we take a look at the charts. We're here at 222. If you wanted to place an alert on TradingView, you just press this plus button, put an alert there so that way you can watch this, revisit it to see if you want to add to a long-term position, but never buy up in this range up here, especially if you see over the course of several months that this has hit a level of support. So this is the level of support that we talked about in the past. I always tell you, be very greedy with your money. Set it and forget it. And of course, this went under $2, and it's not out of question that that could happen again. Now, if you're looking at the major indices or major KPIs, as far as the U.S. economic calendar, we've got several things that are going to be happening this week. So be sure to check that out to see what's happening tomorrow. For example, the Consumer Confidence Index, and we've got job openings. We want to see whether or not these initial jobless claims are coming in, continuing jobless claims. Are we starting to see unemployment tick up past 3.7%, your unemployment rate here on Friday? And then in a couple of weeks, we have that CPI number coming out. And with the way the global economy has been disconnected, especially with China and Russia and so on and so forth, can we really expect 2% to be a realistic number? Do we hear the Fed start to talk about 4% being a new target, just given, a real pulse on what's going on as far as, the CPI number not realistically coming down to 2%, and these basic rate hikes being pivoted to where we start to see, this change from going from 25, 50, 75 to 50, and these decreasing and causing a pivot there, which could allow some investment money to come back into the market as we start to see an official pivot. There's a lot of money, I believe, sitting on the sidelines that's waiting to come in. So not only do we see a pivot with the Fed potentially, if those KPIs or key performance indicators land the way that they're supposed to, and these major indices, do they continue to run up through December? We also have legislation, and we've got the signing of the medical marijuana research bill. This came out, and if you scroll all the way down to this Forbes article at the bottom, it says once the bill officially lands on the president's desk, he'll have 10 days to sign the legislation or veto it. If he fails to act in time, the measure will go into effect without Biden's signature. We're starting to see a lot of these developments in the state cannabis laws and bipartisan cannabis reform at a federal level. We got a big surprise on October 6th when President Biden announced that he would pardon individuals that were convicted of simple marijuana possession under federal law and call for a review on how marijuana is scheduled under the Controlled Substances Act. Building on this critical step, advocates are calling for action in Congress to decriminalize cannabis at the federal level. So as these things start to take place, we start to see more money come into investments like Sundial, Tilray, and other OTC plays that haven't made it to NASDAQ because of what's happening as far as the scheduling of marijuana or cannabis. Now, drug usage and punishment in China, and Trump coming out saying that he's going to run, and this got a little bit of attention, but it just shows you that with a change in government and who's leading this country, it could potentially be a setback or less of a priority. I mean, does cannabis fall into this range? I'm not sure if it does, but we did see major indices pull back here because of what's happening in China, and just further complicating, the COVID lockdowns and people being locked down and the people just having enough. So wanted to point this out because this was relevant as to why we've seen that pullback, and there's going to be things that are going to create opportunities in the market. So just pay attention and don't buy too high. Always remember, fundamentally, if you go back to that key philosophy of buy low, sell high, be willing to take profits off the table when you start to meet key resistance. But also, if you'd like to follow me on Stocks Randy on Twitter, feel free to do so. I like to say things on there that you might want to pay attention to. So also, SNDL renewed their share repurchase program. Now, they've went over this about 3 times, but I just wanted to point out that this isn't the best use of capital, that I believe that this is something that they're just wanting to make shareholders happy. I believe that if this renewal, if they can start to generate some profits and maybe they can see substantial growth out of certain sectors of their business, then they could take advantage of this. But their funds really need to be saved, because last time 1.8 million shares out of the 10.2 is about 20% they used. And a lot of us were saying, come on, what are you doing? Purchase some shares back. You've got this program. And they used about 20% of it. I expect that out of this 11.8 million shares, representing 5%, that between this period of November 21st of 2022 to November 20th, that this repurchase of shares will be about the same. And I don't expect it to happen anytime soon, even though they say in here that this is an opportunistic call to renew this program right here to return value to shareholders. I mean, they really didn't take advantage of it previously, and they really need to save their money so they don't have to take debt or come back to shareholders and further dilute to raise capital. But just know that they can only operate for so long before they have to raise funds. If Zenabis turns out the way that it needs to, that this could be a great buy, still long-term hold, if they can turn Zenabis into a beast. But it has a history of burning cash for the business. And Zenabis, for those of you not familiar, is that medical side of the business, which TILRAY has masterfully turned into a beast with pharmacists, direct relationships, and they are able to charge a premium price for cannabis that is for medical use. So, I mean, there's a lot of things that they're going to have to do to get there, but Zach George, the chief executive officer of the company, said for the first time in this last earnings call, I see contrary indicators suggesting that the Canadian industry is nearing a drought. And what we're talking about here is basically that he believes this is the bottom. And we're going to start seeing that this industry is going to start showing signs of a recovery. So that's something to definitely pay attention to. And if we go back to what he was talking about, that this warrants a more bullish stance, he's still talking about oversupply of licensed and products, continued price erosion, meaning it's oversaturated. But these are all reasons for him to be optimistic that the acceleration of bankruptcy filings is just going to provide them with opportunities. And I believe that he has positioned himself to take advantage of those opportunities. And he says that he does not want to participate in a knife fight. He's talked about bloodbaths in the past. And ongoing between Canadian cannabis companies, credit exposure. He's continuing to put money into these companies. So these are ones to watch as far as default and his ability to be able to acquire them, even though he has acquired so many cannabis companies. And we really need to show scale and the ability to be able to operate profitably with the companies that we have. But I think he's really trying to take advantage of what he believes is a consolidation, and he's starting to see these indicators. So the next few weeks, we expect to provide investors and stakeholders with more clarity about our Sunstream portfolio activities. So this is going to be really important to understand, because everyone was thinking the second half of this year that we were going to start to see gains out of the portfolio, not more money put in at a loss. So very important. We may see defaults and other restructurings create an opportunity for SNDL to gain a meaningful operating footprint in a single or multi-state format. So he's looking at these investments, this credit exposure, as an opportunity to create, opportunity for SNDLs. I just wanted to talk about these operating segments because profitability of the liquor segment isn't that great. I mean, these margins aren't as high as you would want to see. So I'm really challenging the SNDL team and the current shareholders to really push back and ask more questions, the analysts that are on these calls, about the actual ability. I mean, okay, so their basket size may have increased by 1%. I believe, and I've done a video on this in the past about this failed liquor business that they acquired, because Tank Vander, the president of the liquor retail, may not be the right guy to run the business. Maybe we need to shake things up and have stronger leadership that's more innovative, and they're looking at lower cost basis like vodkas and maybe bringing people back to the stores, and how we get included in restaurants and distribution and just everything that's happening here, get a higher gross margin of maybe 50% or 55%. So I think this has massive room to improve, and you can see cannabis retail, cannabis operations, and investments are all operating at a loss for this 9 months period ending in September 30th of 2022. So as they continue to lose here and here on these bottom lines, I mean, this is something that we definitely want to see cost synergies, the business being cost focused, and I'm not really hearing that very clearly in the earnings call on how they are being cost focused. Now, cannabis review, I mean, this 4% increase, this is really the highlight. I mean, this is just not great. I mean, net loss of $98.8 million for the third quarter. So that is up from what it was the previous quarter, which was compared to a net loss of $73.3 million. And if we take a look at these financial numbers here of where we have the cash flow statement, you can see that they've been operating on a continued increased loss quarter over quarter for quite some time. I mean, these last 4 quarters. So, I mean, these last 3 have incrementally grown. So we want to see that revert, turn around, pivot, and the balance sheet has continued to go down. From, way back here last year, the middle of last year, we've just continued to burn that cash down. So we've got to turn this around, and that's why we haven't really seen an amazing turnaround of this price. While we are increasing revenue, our gross margins are really not that great. I mean, 19% to 21%. I mean, they could do better, and we should expect them to do better. And scale is definitely going to be their excuse on why they really have got to do better. Now, Zenabis has been struggling, and the reason that they filed for creditor protection is because they weren't doing great in the past, and that's why the SNDL is acquiring some of these businesses that have failed, because they could not make it. They were either spun off or they just failed. They could not become profitable just due to the pricing pressure, the excise tax, everything that is required. The competition and, the acquisition should make this easier for SNDL to grow internationally. And that's what they should be looking at, is Europe, the second largest cannabis market outside of North America, and including the United States. So significant potential there, but can they make that happen? Now, are they getting it at a fair price? Now, Hexo announced a price of 235 Canadian dollars, $1 million. I'm sure that they are getting at a better price, and there's a significant amount of assets that are coming with Zenabis. So that will be very positive in this next earnings. Hopefully we can see those assets marked down, but the cost of people are going to come. So I'm looking for SNDL to announce some cost initiatives for the business and a clear path to profitability in this next year, like Tilray is doing. So hopefully they can do that. Maybe they are not looking at laying people off, but they should take a percentage of just understanding this consolidation is still happening. And as they acquire a new business, it's going to come with people. So 3 analysts offering 12-month price target for SNDL, median price target of 322, high estimate of 397. So where do you take profits off the table? Up here at $3, it looks like between $3 and $4 if this really gets to run based on some exciting news that might potentially be temporary. And this comes down to find some support around a median estimate of 322. Maybe this will come to settle down around 322. Maybe this does run to 4 and comes to find support around $3. So we'll have to see what happens with this. But as you have an opportunity to buy this under 2 or 225, I would take those opportunities if you believe in what this company is about. Now, this is really interesting. This price to sales trailing 12 months, look at the decrease. I mean, this used to trade at 18 to almost 27 times price to sales trailing 12 months. I mean, a lot of people, a lot of meme retail holders that used to hold this are not trading this anymore. This was a part of a lot of people's portfolio, and they decided to dump it. And we'll have to see who's going to regret that, as this really, I mean, this is only, the Alcana revenue is only part of this for 2 quarters. So as this starts to be part of this for the 3rd and 4th quarter, I mean, this is only going to get lower. This price to sales trailing 12 months, now this is only one indicator, but you can see that it is trading at a 1.5 where Tilray's at a 3 or 4, so consistently. Now, this should turn around. I do believe that this is a good buy, especially if you've got it at 225 or below. Now, we could talk about Tilray. We could go through that. I'm going to do that in a separate video, or this will be too long. But I do want to point out that they do have, they've got a beverage alcohol gross margin of 53 to 57% here. I mean, it's pretty incredible. So just wanted to point that out. Trailing 12 months for Tilray, 322. It's been right around here about 3, but it hasn't come down as far as what we're seeing Sundial priced at. So according to how many shares are issued and, the market cap and the price to sales trailing 12 months, I mean, Sundial is just getting even more competitive. And you can see right here, we've got 2020, 2021, and 2022. They just continue to dominate in cannabis and distribution. And their alcohol has some room to catch up. But look at these gross margins. I mean, keep it small and keep the gross margin strong. And they've even got a wellness sector, which doesn't suffer from that excise tax. So that's really good too, which enables them to have a pretty decent gross margin there. So you're seeing alcohol and beverage, 55, 58% gross margins. We've got wellness, which is right here about 31. We've got the distribution section, which is 6%, which is really low, and cannabis, which is around 18. But I mean, it's been higher in the past, 35 to 47. So those are my thoughts on SNDL. This is one that I believe is a buy. I believe at the right levels, of course. Keep this one on your watch list. We're going to be talking about Tilray in the next video. That's all I got. I'll see you guys in the next video.